Guys, welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Do me a big favor, guys. Get yourself down in the description box. Click on that first link, which is that Moo link. Moo is going to offer you up to $1,000 in NVIDIA stock if you open up a new Moo brokerage account. Now, of course, you got to make some deposits into your new brokerage account in order to qualify for that offer. But if you're in the market for a new brokerage account, a self-directed brokerage app, consider Moo. First link down in the description box. Second link down in the description box is the Wealth Builders Financial Community on Patreon. Guys, all we do in that community is help each other build wealth and get to passive income. None of us are experts. We don't try to be experts. We don't try to tell you what to do. We just share best practices, golden nuggets, tips, what's working and what's not working. And we provide an overall safe community for people to share ideas about building wealth and getting the financial freedom. So if you want to be a part of that community on Patreon, get down to the second link, click on that Patreon link, which is that Wealth Builders Financial Community on Patreon. Well, all right, guys, let's dive into it. The market has been bananas all week. And of course, starting to cause some concern. People are starting to get worried about their 401ks. People are starting to get worried about their Roth IRAs. People are starting to get worried about their overall brokerage accounts and their overall financial health. And it's concerning because it came out of nowhere. I mean, 3 weeks ago, we were on cloud nine. Everything was just hitting on all cylinders. And then all of a sudden, boom, we got hit with a hammer in the back of the head, a financial hammer in the back of the head, and it's causing some problems. Now, I will tell you, we had one bright spot today, in my opinion, one bright spot, and that was the NASDAQ. That was, in my opinion, the only bright spot today. It bounced back somewhat from earlier today. So by this afternoon, before the market closed, the NASDAQ bounced back. But that was about it. Dow and the S&P didn't fare so well. And it's not looking real good right now. Let's dive into it, and then I'll talk you guys through what I'm going to be doing over these next 45 days towards the end of the year. But here we go. The NASDAQ Composite rebounded on Friday as investors bought up shares of key technology stocks, a day after the group led Wall Street to its worst day in more than a month. So you see a slight rotation back into tech. We'll have to see how much of a rotation that is as we progress next week. We'll have to see. But at least today, investors started to kind of rotate back into tech. The tech-heavy NASDAQ gained 0.13% to finish at 22,900.59, snapping a 3-day losing streak. The S&P 500 finished near the flat line. Basically, didn't gain anything, did lose a little bit because it did close in the red. Down just 0.05% at 6,734. We know a few weeks ago it got itself intraday up to over 6,900 points. Didn't quite get to 7,000 because that's been the resistance level, right? Thus far, is that 7,000 has been that's been the ceiling so far. Couldn't quite get there yet. Still haven't gotten there. Still hopeful, potentially could get there by year end. Again, this is not financial advice, guys. This is just me giving you guys my personal opinion on an article that I read, and I'm just giving you guys my personal opinion. Please go out and do your own homework before you make any financial decisions. While the Dow Jones Industrial Average lost 309.74 points, or 0.65%, to settle at 47,147.48. The three indexes bounced back significantly from their lows earlier in the day, which had the NASDAQ and the S&P 500 down almost 2%, guys. But they did bounce back. The Dow had fallen almost 600 points, or roughly 1.3%. The tech trade gained some ground after coming under pressure in recent days. Leading artificial intelligence players, of course, it was NVIDIA and Oracle, both reversed course from their losses seen in the previous session, as did Palantir, Tesla, both of which saw a drop of more than 6% in the prior day. That's crazy, right? But now see what's starting to happen. People are starting to rotate back. When I say people, I'm talking about these major investors. They're starting to rotate back in. Why? Because they, honestly, in my opinion, just my personal opinion, they picked up a lot of nice little dips in some of these bigger, gigantic companies. They picked up some nice dips. When you're talking about a Palantir in that 170 range, when 2 weeks ago, it was in the 200 range. You see where I'm going with this? That's what these big boy investors been doing. Now, hopefully some of us retail investors have been, taking advantage of these opportunities as well. Hopefully. The technology sector SPDR fund, XLK, closed up 0.5% on Friday, making up its 2% decline from Thursday. So now we're starting to see tech starting to move again. In my opinion, just my personal opinion, next, I think we see some small caps start moving, maybe next week, hopefully. Again, this is just my opinion, guys. I'm not a financial advisor, so please go out and do your own research. I'm just giving you what my opinion is. But I think that's what we may see next week. I think we'll continue to see tech starting to ramp up again. But we got to be careful. We got to be careful. So here we go. Major U.S. indexes on Thursday posted their worst one-day performance since October 10. The 30-stock Dow lost 800 points, taking back gains seen in Wednesday's session when it crossed 48,000 point level. Hadn't done that before, guys. Hadn't done that before. But it did do it briefly. Now it's in that 47,000 range. Can it get itself back to 48? We'll have to see. No one has a crystal ball here, but we'll have to see. The NASDAQ plummeted more than 2% as technology giants came away battered. Basically, a lot of investors are concerned about the lofty valuations of some of these big old companies. And, or at least that's the excuse they use in order to sell out of them. But now all of a sudden, like the article is saying here, they're starting to rotate back in. But here's the thing though, a lot of retail investors are really, really concerned, guys, about their 401ks, because if you're someone that's near retirement and you see that nice little drop in your 401k balance and you're getting ready to retire next year or the year after that, it's a little bit concerning. Now, I just lean on the history of the stock market. The history says we go higher. That's what history says. I'm not saying that it will do that. I'm just telling you what history says. So that's the way I think about it. I have to turn off my emotional side of my brain, and I got to turn on that logical side. Well, that's the only way I survive this thing. Because if you let your emotions take over, you might turn into a panicking. I don't want to turn into a panicking. So just be careful. Just be careful with allowing your emotions to take over. And what I try to do is I try to turn off the emotions, especially when we're in a dip session. I try to turn off the emotions and turn on the logical part of my brain, because the logical part of my brain says, hey man, we're in a dip session. That might be an opportunity. You build your wealth in the red, you collect your wealth in the green. So that's kind of what I do, guys, to sort of get myself through these tough times. And I'm just like the rest of y'all who may have seen a decrease, a temporary decrease in your portfolio. Me too. Me too, guys. I got 75, 80% of my net worth in the market. So I'm all in this thing. So don't get me wrong. But what I do is I don't focus on that all day. I let that go. I might peek at it in the morning and then I go on about my business and go on about my day and live my life and enjoy my life. And because I know this has happened before. The whole purpose of the stock market, in my opinion, is to go higher at some point. That doesn't mean it don't consolidate and correct itself now. It does. But ultimately, the whole point of the thing is if you're a long-term investor and you're in the right investments with historical track records of performance, ultimately, the whole point of it is to go higher. Or why would it exist? It wouldn't exist. It wouldn't. So that's why you got to take off that emotional side of you. You got to turn it off and turn on that logical side, because the logical side says, okay, the stock market's been around for 100 years. The modern stock market has been around for 100 plus years. And what has it done over that last 90 to 100 years when you go look at the facts? And again, I'm no expert here. I'm just going, you can just go Google this yourself or go look it up for yourself, guys. Over the last 90 to 100 years, the stock market historically has done around a 7 to 9 to 10% return over the last 90 to 100 years. So my thing is, if I'm long-term in this thing and I'm in the broader stock market, I got an opportunity to capture some of that potentially, right? No guarantees, of course, but of course, there are no guarantees in life, right? But taxes and what? The big D word. That's the only two things that are guaranteed in life. You're going to pay your taxes and we're going to leave this place. Those are the only two things that are guaranteed in this life. Nothing else is guaranteed, right? Nothing else is guaranteed. So let's keep moving. We're kind of switching back and forth between this risk on and risk off type of trade. This is coming from client portfolio manager at Zacks Investment Management. I think people are looking to maybe reposition going into the end of the year, into 2026, just knowing the concentration that most people have built up because of solid performance from these technology companies. So he's basically saying you got risk on is where you're chasing growth in some highly volatile growth companies. Risk off would be, let me go to value companies who have a proven historical track record and we believe they got realistic valuations. So you got risk off and risk on. That's the way I look at it. Now, again, no expert here, but I believe risk on is when you're chasing exponential growth. Risk off is when you say, I don't need that much growth. I just want to make sure I can put my money somewhere and get a decent little return and it's a little bit safer. That's risk off versus risk on. And again, guys, just my personal opinion. Please go out and do your own research on that and come up with your own conclusion. There will be somewhat of a floor, I think, this is coming from the expert, in this volatility. We just expect that you'll probably have more of these 1 to 2% moves up and down till close to the end of the year, just as people reposition and de-risk their portfolios, he also said. After the week's wild swings, NASDAQ ended down 0.5% for the period. However, both the S&P and the Dow held on to gains up 0.1% and up 0.3% respectively. Now, they still closed in the red on Friday, but when you look at the week, they're saying that they closed up, but the NASDAQ slightly closed down when you look at the week. But if you look at the day, just Friday today, then it's the opposite. The NASDAQ closed a little bit up in the green. The other two closed down in the red. But they're looking at it from a weekly perspective in that particular part of the article. Concerns, like I mentioned earlier in the title, guys, there's some concerns out here. And let's get to the concerns. So here are the concerns. Concerns about the AI trade have emerged more seriously this week with the recent wipeout in once hot cloud stock Oracle, further spooking investors about elevated tech valuations, a massive surge in debt financing, and soaring AI CapEx plans. To be sure, Oracle growth is uniquely more reliant on its cloud deal with OpenAI, and the company has far less cash compared to other hyperscalers. So that's where the concerns lie, guys, for a lot of these major investors. The concern about AI, right? They're concerned about companies like Oracle. They're also concerned about other mega caps and hyperscalers with all of this CapEx they're spending on their artificial intelligence build outs. And they're just starting to think, hey, man, you know, a company like Oracle is really, its cloud business is really tied to OpenAI. Is that diversified enough? I don't know. I'm no expert in Oracle. I'm just telling you what the article is mentioning here. AI, this is coming from the experts. AI is truly testing the limits of Wall Street spreadsheets right now. This is coming from Vice President of Portfolio Management at Mercer Advisors. He told CNBC, adding that investors pricing in so much of this future growth that they really can't measure yet just spurs an environment of swings. Here's what he's talking about. You get a company like, let's say, Microsoft or Google or Amazon. They all got cloud service businesses, right? They're hyperscalers. What they're doing right now, guys, is they're taking billions and billions and billions and billions of dollars and investing it into their AI infrastructure, data centers, chips, all kind of stuff. The problem is they haven't gotten a return on that investment yet. And some investors are starting to get worried about that. They're saying, well, goodness gracious, guys, you're spending billions and billions and billions of dollars every year. I mean, if you add up all the hyperscalers, they're probably spending over $150 to $200 billion a year. And they're not really getting any significant revenue from it yet. That don't mean they won't get it in the future, but some of these investors are starting to get a little antsy behind that. And that's what they're talking about here. This is what this expert is talking about. So what happens is you get this environment of swings where 3 weeks ago, they're loving it. 3 weeks to the present right now, they're not loving it so much. That's what you get. That's what he means by this environment of swings. The pendulum swings this way when things are perfect, and then it swings back the other way, things get bad. So that's what he's talking about. The valuations are so stretched, and any little movement in expectations on either profits or interest rates is going to have a bigger and bigger effect on the stock price. This is coming from an expert, guys, not me. This is coming from an expert. Here's another concern. Mounting unease about the Federal Reserve's upcoming interest rate decision exacerbated the existing pressure on the market this week. See how important that interest rate discussion is to investors. Because investors know if interest rates come down, typically assets go up in value. So if we can get another 25 basis point rate cut from the Fed, that's awesome. But right now, there's only a 50% chance we'll get that rate cut. 3 weeks ago, it was in the 80s. That's what people are concerned about, guys. They're very concerned about the Fed not reducing short-term interest rates on December 10th in their last meeting of the year. So what do people do? They risk off. They start taking money out of certain things and moving it around to other places to be able to be out of harm's way, just in case the Fed don't reduce those rates on December 10th. And that's what they're talking about here. That's another concern. Mounting unease about the Federal Reserve's upcoming interest rate decision exacerbated the existing pressure on the market this week. Traders are now pricing in less than a 50% chance that the central bank will cut its benchmark overnight borrowing rate, aka Fed funds rate, by a 1/4 percentage point during their December meeting, which is lower than the 62.9, almost 70% likelihood that markets priced in earlier this week, and a 95.5% chance a month ago. So in October, there was a 95.5% chance that the Fed would cut interest rates by a 1/4 percent in December meeting. Now that has dwindled all the way down to 50%. So now you're starting to figure out why you're seeing what's happening in the stock market right now, because of all of these reasons, these concerns. Now, that doesn't mean that's not an opportunity for somebody. Like Buffett always says, be greedy when others are fearful. Be fearful when others are greedy. So somebody out here is taking advantage of this and not opportunities knocking, and they're answering the door. You got to figure out what you're going to do, man. You got to figure that out. Investors are counting on another rate cut in December to revive the economy, as well as risk-taking on Wall Street. But some Fed members are growing concerned that inflation is too sticky to warrant another rate decrease this year. Ding, 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 another concern, inflation. See, you got all these concerns, guys. That's why you see all this back and forth and this de-risking. People are concerned, particularly major investors and retail investors. I'm concerned, but I'm long in this thing. I got 9 more years in this thing, so I know what the history of the stock market says. So I know I got 9 years in this thing, so I'm not a panicking. I'm just going to keep DCAing every single month on the 15th like clockwork. And as many of these cheap shares I can buy, I'm going to get them. Because I know at some point, in my opinion now, my personal opinion, history repeats itself. That's all I'm saying. The U.S. government shutdown, ding, 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 ding. There's another concern right there. There's another major concern people are having, investors are having. This government shutdown, even though we're opening back up, guess what? It's temporary. If they don't have a funding bill that everybody can agree on by January 30th, 2026, guess what happens? Government shuts down again. See where I'm going with this? Yeah. So the U.S. government shutdown, which was the longest in history, ended Wednesday evening after stretching on for more than 6 weeks. That development had been expected to end a period of time where investors were operating without important economic data. Instead, it has raised new questions. White House Press Secretary Caroline Leavitt suggested that some economic data that was due out during the impasse might not be released. Ding, 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 ding. There's another concern. These people don't want to release the data. They're saying they may never release data again. And I know I'm blowing that out of proportion a little bit, but basically we may not get any data, guys. I mean, how can we make decisions on building wealth without data? We need data. These people don't want to give up no data. They just want to come out in the internet world, in the tweet world, and just tell us what the data, whatever data they want to give us. They don't want to give us no real reports no more. This is what I'm trying to tell y'all, man. That's why people flipping out. That's why people are flipping out, because they're thinking, goodness gracious, man, we can't even get a CPI inflation report on time. We can't even get a jobs report on time. When was the last jobs report we had? I don't even know. Y'all drop it in the comments. When was the last jobs report we had from the Bureau of, what do they call it? The government entity. I can't remember the name off the top of my head right now. Oh, the Bureau of Labor Statistics. That's it. When was the last time we got anything from the Bureau of Labor Statistics, guys? See, that's a concern. That's a concern, man, when you're not getting employment data. You're not getting unemployment data. You're not getting labor market data. You're not getting inflation data. And all the other data we were getting up until what? September? That's a concern, guys. That's why you see major investors risk off. They're saying already we believe these companies that we're chasing, these growth companies, these artificial intelligence companies are overvalued. And we don't want to get caught with our pants down. Because what you got to understand, guys, a lot of these investors are not like super duper long-term investors. They're somewhat short-term investors, right? So they don't want to get caught in something because they don't have the data to get ahead of the curve. A lot of these investors like to be ahead of the curve. They like to kind of know what's coming. They kind of like to prepare and get in positions because they know. Now, don't get me wrong. They still got information you and I don't have. The billionaires, they're billionaire hedge funds. You know, a company like BlackRock, guys, has like, 13 trillion under management. They have more under management than probably your 4 largest traditional banks in America. Put together Wells, Bank of America, Citi, and JP. Put all of them together. When you're talking about assets under management, you can put all of your 4 big boy banks together, and they still don't have much more. They're about $3 trillion short than BlackRock. BlackRock has the most UAMs under management than anything on the planet. BlackRock does. And guess who number 2? Vanguard. They're coming in with a cool 9 to 10 trillion under management. These are your 2 big boys. When they de-risk, guys, the market moves. When they change positions in something, the market moves. Between those 2, they got close to $20 trillion under management. They heavyweights. So when they move, guys, the market moves. You only got about $58 trillion market cap value in the stock market. These 2 companies got about 20 trillion of it under management. So when BlackRock says, hey man, we're moving, we're out of this position, the market gonna move. When they say, hey man, let's risk on and get back into a position, guess what happens? Market moves. That's just the way it is, guys. These guys are market movers. Now, again, this is not financial advice. I'm not a financial advisor. I'm just a guy on YouTube giving you his opinion. So please go out and do your own homework before you make any financial decisions. But I'm just trying to give you an idea of what's happening here and why you see things, in my opinion, though, just my little limited opinion, unprofessional opinion, why things are doing what they're doing. That's why I wanted to bring the CNBC article to you and read it for you so you don't think I'm trying to sit up here and act like I'm an expert, because I'm not. I'm just giving you what the experts are saying. I'm giving you what CNBC and the expert that they interviewed are saying. But it's basically the same thing I'm thinking. The only saving grace for me, guys, in this whole thing, is I know the whole point of the stock market is to go higher as long as I'm patient. Now, that's my opinion. You don't have to agree with that. I'm just giving you my little 2 cents. The whole purpose of the stock market, in my opinion, is to go higher. That's the whole point of it. So all I got to do is continue DCA in my favorite ETFs, my favorite individual stocks, and just do it over a long period of time. And I got an opportunity to be successful here. No matter what the market is doing right now, I got an opportunity to be successful long term. Short term right now, things are volatile and choppy. But we've been here before, or at least I've been here before. I've been here many, many times, guys. The last time I was here was Liberation Day, 7 months ago, 8 months ago. Liberation Day was worse than this. I'm talking about worse than this. So, and things recovered and went higher. I mean, you're talking about, and again, this is not financial advice. I'm just giving you an example of one company that went higher. NVIDIA, after Liberation Day, stock price get down to $86 a share. This was after Liberation Day. Just a week or so ago, this thing got over $212 a share. 8 months ago, it was at $86 a share. See how things change? So that's why for me, it's time in the market instead of trying to time the market. I just rather just dollar cost average in every month. Some months I'll buy shares cheaper. Some months I buy them a little more expensive, but over time, I should, according to history, hopefully I will be in a position where my cost basis is much lower than what the current value is when I get ready to sell them. That's the whole point of this thing. No guarantees, of course, but that's the point of it. So yeah, man, I just wanted to get on here for a few minutes, man, and walk y'all through kind of what was going on this Friday night. Hopefully everybody's having a good Friday, good week. Don't let this stuff get on your mind, man. Go have you a good weekend, enjoy yourself, and just go long. In my opinion, my opinion is go long, and hopefully things will correct themselves. I think they will. I think history says they will, but again, nothing guaranteed. So please make sure you know what you're doing. If you're going to be doing this kind of thing, make sure you're built for it. Because if you ain't built for it, it's going to be a struggle. Because right now, I know for me, if I wasn't built for this, I'd be struggling right now because my portfolio done took a nice little dipsy. A nice dipsy. But I know over the next 9 years, if I just keep being patient, keep being disciplined, keep my consistency going, I know over the next 9 years, I should be okay. What's my alternative? I guess I could keep it all in my savings account and let inflation eat it up. I guess I could do that too, right? I could let it just sit in the savings account and let inflation take it. Because inflation is 3% right now. And I don't know a savings account that I know of I'm talking about a normal bank savings account. I'm not talking about all y'all online stuff. I'm talking about a regular bank at a brick and mortar bank. I don't know anybody that's paying a 3% on the FDIC side. Now, I know you can get that on the brokerage side, but I don't know nobody paying that on the FDIC side. I'm talking about real brick and mortar bank, not none of these fly-by-night online things that some of y'all mess with. I don't mess with any of them. I need to be able to go walk into my bank with my money. It's online. It's in the Cayman Islands somewhere. I don't want to deal with that. I want to be able to walk right into the front door or wherever my money at. I don't want to have nothing to do with no online. I got a bunch of money online somewhere and ain't no bank. Ain't nobody to talk to. You got to talk to your phone. You got to email them. No, thank you. But that's just me. You do what you got to do. I ain't hating on you. Do whatever you feel like is best for you. But for me, you got to have a location. I got to be able to walk into the location. I don't want nothing online where I got to email you. Or I got a chat bot. I don't want no chat bot. I don't want no chat bot. I want a real live human being when I'm trying to figure out what's going on. You feel me? So right now, if I keep all my money in the savings, inflation gonna take it. Inflation 3%. If I'm not earning 3% on the money and inflation is 3%, you ain't got to be a rocket scientist to figure that one out. Every year I'm losing 3% of my money to inflation. And what's inflation? Prices going up. Right now, prices on my milk, my eggs, I don't eat eggs, I do eat eggs, but not like that much. But like almond milk, cereal, coffee, whatever else I eat, it all done went up at least 3%. So my purchasing power on the money that I got at the bank, if I'm not getting a return on it, my purchasing power is less and less every year as inflation keeps raising prices. So the money that I got in my savings account, it's not going to have the same purchasing power in 2026 as it had in 2025 because prices are going to go up. See, a lot of us think, oh my God, we want to kill inflation. You'll never kill inflation. Prices go up, guys, because it's going to cost whoever's making that product more money to make it. What do you think they're going to do? Just be in business not to make money? No, they're going to raise the prices. The key is how fast the prices go up. That's inflation, how fast they go up and how much they go up by. We know we're going to have, the Federal Reserve says we want 2% inflation. That means every year, the prices of our goods and services go up by 2%. That's the Federal Reserve's mandate. Right now, we're at 3%. But if I got my money in my savings account and it's getting 0.25%, I'm $2.75% in the negative. Now, again, guys, I'm no expert here. I'm just giving you my little basic opinion. You go out and do your own homework and come up with your own conclusion. Like I said, get down that description box and check out that Moomoo link. The good folks at Moomoo are willing to give you up to $1,000 in NVIDIA stock if you want to try out their new brokerage account. Of course, you got to make a deposit. So all that's in the details. When you click on the link, you'll know what deposits you need to make. And if you feel like it ain't for you, then, throw it out the window and move on. Don't do it. I'm just offering you something that the good folks at Moomoo are willing to give you if you try out their brokerage account and are willing to make a deposit. Also, check out those Wealth Builder Financial Community on Patreon. That's my community on Patreon. And man, I love that community. We have a good time in that community. We do live streams mostly every Monday night. I know my wealth builders know I've been slacking a little bit here and there because I've been having, my lights went out last Monday. And then I have internet. The deal is we're trying to have these live streams every Monday night. We've been doing a pretty good job up until recently, but we're going to get back on track. The good news is you got a couple thousand people in there that are headed in the same direction, which is building wealth the right way. Not trying to, there ain't no shortcuts. Ain't nobody going to be there to do your research for you and tell you what to do. That's not the kind of community it is. It's a community of people who are like-minded, who share ideas about building wealth. No one's an expert, though. No one's going to tell you what to do. You get in there and ask questions, and people will give you their opinion. And then you can vet whatever you want to vet before you make your decisions. But at least you got a community of people who are like-minded and thinking about their future and thinking about passive income. Maybe that's something you want to stop by and check out. Second link down in the description box. If you're stopping by the channel for the first time, please consider subscribing to the channel, guys. Certainly hit that like button. Certainly do all those good things. If you're stopping by the channel for the first time, please, 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 please consider subscribing. Thoughts become things. See it in your mind, hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. I will catch you guys on the next one. Y'all have peace. Y'all get you some love and get you some happiness, man. Peace.